So we're heading over to see Dave Brown of Cornerstone Mortgage. Dave does a lot of the loans for my clientele and is a guy that gets things done on time and with no stress. Cornerstone Mortgage. We're getting ready to go see Dave Brown.
California clothes in the TV shows, perfect design.
So you're starting to get it going. I can tell that, and I don't want him to stop and we start video, and then what you're getting ready to say is going to be value. I know that. So what were you?
Well, let me tell you the three things it touches on now. In terms of, they are more. They're a little bit more about differentiating me and our company than they are just general questions. And I kind of think I want this to be more general questions, but I'll hit the three topics and then we can maybe figure out how to refine those into. Okay, so here's usually when I get a new prospect I've never met, they've been referred by John Arnold. I usually start with, ask him some questions, tell me what you're looking to do, and then I always say, well, let me, if it's okay, let me just give you a quick overview of our company. I know John referred you, but I want you to at least have a sense of who we are. That way you can ask any general questions that you have, and then we can dive into specifics and numbers from there. Right. So I describe us as we're kind of a big company and a small company at the same time. And there's some unique advantages we get and our clients get as a result. And the simplest part of a mortgage is, what does a mortgage cost? It's interest rates and fees. A lot of these questions will overlap. Should I pay cash? Should I get a loan? Most people don't really have the wherewithal to pay cash. So usually it's a variation of, should I put 5% down or 20% down? Or should I have a 30-year fixed or a 15-year fixed? Or what's the right loan product and mix of debt versus equity? So to that question, I always start with, it's a matter of priorities. And if I've tried to simplify what I call a priority ladder to get people think about where the mortgage fits into their life and their balance sheet. And generally, some people have a very detailed financial plan, most people don't. But if you simplify it and you think about your priorities, you can usually fit it together pretty simply. And it's not a complex discussion, but the first one is simply, what do you have for reserves, and what do you need to sleep at night? What's your emergency money? The second one is, what about other debt that's more costly than a mortgage? Car loans, student loans, credit cards. We're going to want to use any excess cash flow to retire these before we increase our down payment or go from a 30-year fix to a 15-year fix. The next huge one is retirement planning. You can borrow for a lot of things in life, but not retirement. So I think retirement planning, contrary to what Dave Ramsey might say, is more critical than paying a mortgage down. The next one, if you have a family and children, maybe you've got college funding in your plan, maybe you want them to pay for their own college, but whatever it might be, you might have college funding. Now we get to the mortgage. So if you can put X amount of dollars down and take on X amount of house payment and not impose on these priorities, this is probably where the mortgage fits into your financial life.
Just like I said, Dave Brown, he's good at what he does, and I'm thinking that's going to come across really well though.
So smooth.